Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the 7th problem onwards on depreciation. Till the last video I've completed 6 main problems on depreciation. So if you're continuously watching all the videos, you will get a lot of command on the topic of depreciation. Different types of problems I'm solving. So before starting the next problem, I expect my viewers to have a printout of the problems which are given in the link under my description. So always keep ready the printout of the problems before watching the video. Take a screenshot of the solutions of few problems, then I explain all the problems from 7th problem onwards. Come on, see the 7th, problem number 7. A machine is bought for $10,000 and depreciation is to be charged at 20% on reducing balance method. Calculate the depreciation for 3 years. Very simple problem. Only calculation of depreciation for 3 years. Which method? RBM, reducing balance method. What is the rate of debt? 20%. That's it. So simple. So calculation of depreciation for 3 years. RBM, reducing balance method. What is the cost of the machine? It is given 10,000. Now at the end of first year, depreciation at the end of year 1. So 10,000 into 20 by 100. 20% means 20 by 100. So 2,000 is the debt. Deduct 10,000 minus 2,000, 8,000. Now we'll come to the end of second year. So depreciation at the end of year 2. 8,000 into 20 by 100, 1,600 is the debt for the second year. Deduct 1,600, 6,400. Now end of the third year, depreciation at the end of year 3. So 6,400 into 20 by 100, 1,280. Deduct 1,280, 5,120. So this 5,120 is the carrying value at the end of 3 years. That's it. This is the 7th problem. Now 8th problem. A joinery manufacturer has bought a machine for $16,000. It has an expected life of 4 years and a disposal value of 1,000. So here the cost of the machine is given $16,000. Scrap value is $1,000 and the life of the machine is 4 years. That means we can easily apply straight line method because cost, scrap and life is given. The owner asks for a comparison of depreciation to be charged using both methods. Both methods means two methods are there. Straight line method and reducing balance method. So here the businessman wants to make a comparison of the two methods of depreciation, straight line method and reducing balance method. For straight line method, the annual depreciation will remain constant. So here annual depreciation according to SLM, cost minus scrap divided by life. That formula we apply. And a percentage of 50% to be used for reducing balance method. For reducing balance method, the rate of debt is 50%. Now we have to make a comparison of depreciation according to SLM and according to RBM. Now see, the annual depreciation as per SLM, straight line method. The formula is cost price minus disposal value, or we can say scrap value, both mean same, divided by number of years of use or estimated useful life. So here in our problem, the cost price is given 16,000 and the scrap value is 1,000 and the estimated life is 4 years. So it comes to $3,750. This $3,750 is the annual depreciation according to SLM, straight line method. And it will remain constant. Now in a tabular form, comparative form, I am calculating debt. So in the left hand side, method 1. Which method? SLM, straight line method. Right hand side, method 2. That is RBM, reducing balance method, dollars. Now cost. The cost of the machine is 16,000. Here 16,000 I have taken, here also 16,000. Now depreciation for year 1. Every year depreciation remain constant 3,750 in SLM. So 3,750 SLM. In RBM, Depreciation 40%, 50%. 50 or 40? 50%. So 50% of 16,000 comes to 8,000. Now deduct 16,000 minus 3,750, 12,250. Here 16 minus 8, 8,000. 1 year completed. Now second year end. Depreciation for year 2. Again same 3,750. But here 50% of 8,000 RBM, reducing balance method. So 50% of 8,000 comes to 4,000. Now deduct 12,250 minus 3,750, 8,500 is the book value. Here 4,000, 8,000 minus 4,000, 4,000. 2 years completed. Now at the end of year 3, depreciation for year 3, same depreciation 3,750. It will not change first year, second year, third year. But here 50% of 4,000 comes to 2,000. Deduct 2,000, 2,000 is the balance. Here 8,500 minus 3,750, 4,750 is the balance. Now fourth year, because the life of the machine is 4 years only. Now depreciation for year 4, 3,750. Here 50% of 2,000 comes to 1,000. Deduct 2,000 minus 1,000, disposal value 1,000. Because 4 years are over, the life of the machine is 4 years and 4 years are over. After 4 years, $1,000 is the disposal value. Here also 4,750 minus 3,750, 1,000 is the disposal value. That's it. This is a comparative calculation of straight line method and reducing balance method. That's it. Next problem. Problem number 9. Now, see carefully. A business buys a motor car on 1st July 2016 for $8,000. They buy another car on 1st July 2017 for $11,000. So 2 motor cars. First motor car $8,000. Second motor car purchase $11,000. So totally 11 plus 8, $19,000. 2 motor cars are there. The first car was purchased on 1st July 2016 and second motor car was purchased on 1st July 2017 after 1 year. They expect each car to be in use for 5 years. The estimated life of the car is 5 years for both the cars. They expect the disposal value of the first car to be $500 and the second car to be $1,000. This is the disposal value, scrap value. First car 500, second car 1,000. Whenever the cost of the asset, disposal value and life is given, we can assume that SLM will be applied. The formula is cost price minus disposal value divided by estimated useful life. Now, they use the straight line method already given. Calculate the depreciation on each car. First, we have to calculate what is the debt on each car. Secondly, prepare motor car account and provision for depreciation account. We have to prepare 2 accounts, motor car account and provision for debt. And thirdly, income statement extract. And lastly, non-current assets in the statement of financial position for each year. That's it. So I have read the complete contents of the problem. One by one we have to solve it. First of all, it is asking you to calculate the depreciation on car 1 and car 2. So according to SLM, straight line method, the formula for depreciation, cost price minus disposal value divided by estimated useful life. Number of years of use. So motor car 1, depreciation. The cost of the car is 8,000. Scrap value 500. Life of the machine is 5 years. So divide 1,500 is the debt for first car. Second motor car, depreciation. Cost of the car is 11,000. Scrap value 1,000. Estimated life 5 years. $2,000 is the depreciation. First part completed. Asking you what is the debt for first motor car and second motor car. Secondly, it is asking you to make 2 accounts. Motor car account and provision for depreciation account. We'll complete this one. Motor car was purchased. First motor car was purchased on 1st July 2016. So 1st July 2016. When car is purchased, the entry will be motor car account debit, then bank account credit. Motor car debit, bank account credit. So motor car, here I am writing bank. What is the cost of the first motor car? It is 8,000. 8,000 is the cost of the first motor car. Now the year begins from 1st July 2016. So year ends on 30th June 2017. So on 30th June 2017, after 1 year, depreciation has to be provided on the first car. 30th June 2017. So what is the entry? Income statement debit, provision for depreciation credit. So this is the provision for depreciation credit side. Here I am writing income statement. What is the depreciation on the first motor car? 1500. So I am writing 1500 here. Here date is 2017 June 30th. This is the entry for depreciation. Now close the year. First year ends. So here 2017 June 30th. Balance carried down 8,000. Here also 8,000. Here also 8,000. Now brought down balance. Balance brought down 8,000. This is on 2017 July 1st. Next year will begin. 30th June the year ends. Next day July 1st new year begins. Similarly here also 1500. Here also I am taking 1500. Balance carried down 1500. 2017 June 30th. Now next year 2017 July 1st. Balance brought down 1500. So 1 year completed. Now we are in the second year. Second year July 1st. On July 1st 2017 the second motor car was purchased for 11,000. On 1st July 2017 a new second motor car is purchased. Again motor car account debit, bank account credit. So motor car debit side, bank. What is the cost of the new motor car, second motor car? 11,000. 11,000, same date. Another motor car is purchased. Now year end. The year will end on 30th June 2018 because our year is beginning from July 1st 2017. So year will end on 30th June 2018. So entry will be for depreciation. Income statement debit, then provision for depreciation credit. So this is the provision for depreciation. Here I am writing down income statement. This is 2018 June 30th, last date. Now depreciation we have to calculate for both two motor cars. So what is the total depreciation? 1500 plus 2000. 3500. 3500 is the depreciation for the second year. Now we close the year. We close the year. So year will be closed on 30th June 2018. So 2018 June 30th. Balance carried down 8,000 plus 11,000, 19,000. Here also I am taking 19,000. Here also 19,000. Next year will begin from 2018 July 1st. Balance brought down, that is 19,000. So second year we have completed 30th June 2018. Now 1st July 2018 new year will begin, brought down. Here also same thing. Now what is the total? 1,500 plus 3,500, 5,000. Here also I am taking 5,000. Here I am taking balance carried down 5,000. Last date 2018 June 30th. Now 2018 July 1st. Balance brought down 5,000. That's all. It is asking you to make two accounts. So we have prepared two accounts, motor car account and provision for depreciation account, 2 years. That is 2016 to 2018. Or lastly, it is asking you to show the income statement extract for 2 years. So here, income statement extract for the year ended 30th June 2017. 2017, depreciation. For 2017, how much is the depreciation provided? 1500 only for one motor car. In the first year, we have only one motor car. Depreciation is 1500. In second year, we have two motor cars. So depreciation for two motor cars are 3500. 3500. This is depreciation. That's all. Income statement extract over. Lastly, it is asking you to show the non-current assets in the statement of financial position. In the statement of financial position, how the non-current assets will appear. So here non-current asset is motor car. In first year, 2017, only one motor car was there. The first motor car, 8,000. So 8,000 was the cost of the motor car. And the depreciation provided in the first year on the first car is 1500. So deduct 1500, total depreciation 1500. So 8,000 minus 1500, it is 6,500. Carrying value is 6,500. In second year, 2018, we have two motor cars. So what is the cost of the two motor cars? 19,000. 19,000 is the cost of two motor cars. And what is the total accumulated depreciation? Total accumulated depreciation is 5,000. 5,000. Here 19,000 minus 5,000. 14,000 is the carrying value. That's all. So in this problem, it is asking you to calculate the depreciation. We have calculated. It is asking you to show the two accounts, motor car account and provision for depreciation account. Remember, the cost price of motor car will remain same. It will not change. We have purchased a bank 8,000, then carried down, brought down. The second motor car is purchased on 1st July 2017, bank 11,000, total 19,000. 19,000 carried down, brought down. That's it. This is the motor car account. Provision for depreciation, every year end, depreciation will be provided. Income statement debit, provision for depreciation credit. The credit side, income statement 1500. Now carried down, brought down. Now second year end. When second year end, again we have to provide the depreciation for two motor cars. The first motor car depreciation 1500, second motor car depreciation 2000. The total depreciation in the second year is 3,500. 3,500. Now total accumulated depreciation 5,000 carried down, brought down. In income statement, we should take only a depreciation of the current year. So first year, only depreciation 1500. Second year, depreciation 3,500. That's it. Lastly, statement of financial position. So totally 9 problems I've completed. 9 main problems I've explained on depreciation. So if you're satisfied with my lecture, give a like to the video. Share my channel among your friends, among your groups, so that more students can watch the video and enhance the knowledge. Subscribe my channel, and lastly, give your comments on these channels. Inshallah, we'll continue the next problem in the next video.